So how do you mark these support and resistance zones? Is very, very easy. Very, very easy. So first we are looking at it from the day time frame. Right? Let me remove all the drawings here. Let's look at from the daytime frame. On the day's chart, you expand it, nothing wrong. As much as you want, you can expand it. You can see 1, 2, and 3 days, the price was pushed on from this particular level, from up above here. That is 3,370. And you can see 3,349. These are the areas from where the price can be pushed down. So even if we take a very small zone here, small area here, let's make this extend to right and say this is a supply zone, correct? That's a supply zone on the top. Is it available? Visibility, yeah, on it. Yeah, okay. Then you have one place here. Right? These are the two areas from where the price will be kicked down. This is where the price has not been able to sustain. Rejected. Price rejection has happened. Now, price acceptance, where has it happened? Price acceptance has happened in this area twice. So let's go to this and make it as demand zone. Right? Now you have these two areas very clearly for you, demarcated. Right? Now, there is one small area here, which is again a supply zone. From yesterday, this has gone up from here. Now, if we go to a 4-hour time frame, you see on the 4-hour time frame, twice this area was used. There was a touchdown and the price went up. And here the price comes, touches here and goes back up. Now, on the 4-hour chart, we are seeing this is another area. We can just put a line there for us to see that further from the 1-hour time frame. So go to the 1-hour time frame. So on the 1-hour time frame, this itself is holding good. This particular level is holding good. Now, how price action traders work? If the price, they will sit with a limit order here. They will sit with a limit order here. Okay. The price comes here, takes all the limit orders and goes back up. That's how it works. Now, if you see when we enlarge this on a 1-hour time frame, okay, on a 1-hour time frame, you see this area has been very strong. The same thing has touched today also. Same zone has been touched today also. Twice it has worked from here. So what we do is, we will look for a small area here. Whenever the price comes here, when it goes down, it can be a fake out. And it has come back up again. Right? You will start understanding how the price action works. Okay. So on the higher side, if you see from where till where the price can go, this is a zone here that we have, which is a supply zone. What is this? This is supply zone. We are getting it from the top. So whenever the price goes up, it touches there and comes back down. Okay. So we have very clearly certain zones that have been marked out. So we'll come to a 15-minute time frame. Yeah, on a 15-minute time frame, how many times this is touched here? Right? This is from yesterday. Once the zone is formed, it will come tap the zone and go back up, tap the zone and go back up. So looking up from the higher time frame, you will know which are the zones from where you need to, the price will be The price will tap and go back. See this on 5-minute chart? You will easily come to know that there is a minor zone here. There is a zone here. This is a supply zone. Demand zone. There's a demand zone here. See the price, how many times has worked from this level, from the demand zone. Now, when we come to the 1-minute time frame, I think, I don't know why it's not showing all these zones on the 1-minute time frame.
What do you want?
Showing only up to 5 minutes.
Take.
So imagine if you are breaking this zone, if you're breaking this zone, 3,300 zone, it will fall for almost about 40, 30 points. So when will it break this zone? We don't know. But if the zone is marked up in your channel, on your system, if the zone is already on your system, it becomes that much easier for you to trade. There's some problem with this. I don't know how to set it right. Let me see. Retaining them on the 1-minute time frame. So I don't know what it is.
Okay.
We'll check it out later. So once you mark these zones, it becomes that much easier for you to, if it is there only, we can. Save. Okay, I'll do the settings some other time. But just to give you an idea, whenever the price moves to that area, it will just hit and come back down. You see that? It will hit and come back down. So that is how you create your price action, your methods, and start working with them. So marking out your zones is one of the most important things that you do. Now, as of this is concerned, now we are having 3 touchdown areas, right? Now, these 3 touchdown areas also can be connected with a trend line. So if you see this, it is going in a parallel line here, right? If not a parallel line, this is coming out flat here. So what happens? This becomes your flag and pole or an ascending triangle. So this is how all the geometries are formed. You don't need any of those geometries. Basically, you need to know from where the price is reacting. As of now, on a minute scale, this is where the price is reacting from, right? If I take it down to, this is a, this is a supply zone, right? That's a supply zone. because this is the price has reacted from this level many number of times, right? If you go back in retrospect also, this candle also has hit that level. So you see there is a uh, zone there. So it's easy to identify, but don't keep on marking zones so that you will, like if you mark a zone here, you will see this is a small target. But yes, this will be target number one. This will be target number two. This will be target number three. How you set your targets? What's your TP1, TP2, TP3? It's based on these levels. So TP1 will be this level, TP2 will be this level, and TP3 will be this level. Now here, do you need any indicator for this? All you need is a good sense of identifying where the zones are. The moment you know these things, your indicator also is supportive. This is the red. Now you see your red is gone up here. It is coming back from a zone. That means your TP1 is gone. But from here, you know that you can take the TP2 as your TP1. This is the TP1. This will be the TP2. So what do you do at that time? You will take a trade here, short trade at this level when the low breaks. And the high of this will be your, or just below the low of this will be your stop loss. Then you can wait for your trade to work out.
Supply and demand zone. That is the red one. You took this big green candle top, right? And you have marked it.
Ah, okay. Do you see how many candles have touched that zone?
Yeah, say 5, 2, 3, 4, 5, 6,
So it is not
7.
just the green candle. It has to take these also into account.
Okay.
So this becomes your zone. And
Okay.
this breakout, why we suggest you to wait for the candle close always? Because you will be saved from the fake outs.
Okay. Got it.
Now, when the price went down here, those who got into a sell position from here
Hmm.
will be having their stop loss somewhere here on top, above this green candle top. Correct?
Okay. Yeah.
So when this fake out goes, it takes all the stop losses that are here. This is what is called as liquidity.
Yeah.
What is liquidity pool? Now, understanding from what they say in YouTube to what you see here is different. This is the liquidity pool.
Yeah.
Did it continuously go up and take the entire liquidity here? Yes, no?
Yes.
This candle
Yeah.
took out all the liquidity here.
Hmm.
What is liquidity pool? You need to understand
Money
it
to
very
buy,
clearly.
money to buy or money to sell?
No, no. See, this is the low of this candle, and this is
Yeah.
the high of this candle. In between this, there is no price.
Yeah.
Correct? This has jumped and gone down all the way down.
Yes.
So a smart trader will keep his stop loss above the liquidity pool.
Oh.
Okay. What you
Yeah.
and
Yeah.
me will do, we'll have our liquidity pool. We'll have our stop loss somewhere here because the high of the green candle is here.
Yeah.
We'll keep anywhere in this area. Correct?
Agreed. Yeah.
So what the big money will do, will come in here, take all the stop losses into the liquidity pool and come down. But where is the zone that we had marked? The zone was here.
Yeah.
Correct?
Yeah.
This is all you need to know.
Got it.
Now let's say this area I had marked. I had marked this area and said if the
Yeah.
price crosses this level, we will be having a, yeah, we'll be having the price Nachpa. Take that. Okay. This was the area which I said if the price goes down, we'll get a short trade. And we got the short trade.
Yeah.
That's because see how many number of times the price was accepted here.
Yes, yes, yes.
So if this breaks down, then you will get a trade. That's how you identify. When you're scalping for a very few candles. If you're in this trade also, maximum you're here for 15 minutes.
Yeah.
7:15 to 7:30. The 15-minute
Mm.
frame. That's the longest period of time.